good afternoon, and welcome to BSBA's current edition of Finance Fridays. We hope that you are ready to learn and glean some important information that helps to make you better. Today, I have with me special guest, Mr. Will Jackson. He is the Vice President of Small Business Access at U.S. Bank. And I also have Mr. Keith Leonard, who is a small business advisor, and they are here to share some very important information with you. So get your pens and papers out and take some notes, because you're going to get a lot of information, great information today. All right, fellas, go ahead and introduce yourself and take us away.
All right, Keith, go ahead.
Hi, everybody. My name is Keith Leonard. Like Selena said, I'm a small business advisor. My job at U.S. Bank is to help small businesses get access to capital. And that's through helping you find out essentially the best fits for your needs. So
Thank you for that, Selena, and Keith. Thank you for that. So my name is Will Jackson. I'm the Business Access Advisor for Northern California for U.S. Bank. And in my role, I focus on minority business, specifically Black business. Because as we know, when it comes down to finances, the memo wasn't necessarily distributed evenly. So in my role, we're just really being intentional and deliberate about closing this racial wealth gap, but ultimately getting to the point to where we're no longer having that conversation any longer. So providing a roadmap so you small businesses can have the tools, the resources, and strategies you need so your business can be sustainable and successful.
So I'm going to put myself back on here. So before we jump into this very important conversation, or you jump into your presentation, I want to talk about what is an entrepreneur and what are the main things that you need to have in place to really be, we talk about people being in business all the time. Yeah, I'm in business. I got a business. I got an LLC. What does it mean to actually be in business?
Well, I think first and foremost, people, let's stay off YouTube and TikTok. That's first and foremost, right? I think it's about having a relationship with a banker. There's an acronym that I would love for you all to write down. It's called BAIL. Now, you don't have to have all these pieces in place at one time, but you need these pieces. You need to have a relationship with a banker. You need to have a relationship with an accountant, an insurance person, as well as your legal representation. You're going to need these things. And this is your super team. And these are the individuals who are going to be invested in your success, having conversations all in concert to ensure the sustainability of your business. But when we talk about from a documentation perspective, from a traditional lender, before we even get to the money piece, I understand you need capital to grow your business. That is essential. But before we even get there, we need to make sure that there's a business plan in place. And a business plan is a detailed outline of your company's operations, your goals, and your financial projections. When you think about it, lenders or investors want to see a business plan before providing funding. And it also helps identify potential problems that may exist or we can be prepared for. Your financial statements, your balance sheets, your income statements, cash flow statements. These are things that need to be in place. We're looking for DTI, the profitability of your business, as well as credit history, tax returns. You need to have both personal as well as your business tax returns in place. I'll allow my colleague Keith to finish off the list of things that we need, but these are just things that need to be in place before we even get to the actual, hey, I'm doing business, but we just want to make sure that you're doing business correctly.
So I heard you say business plan. That's number one.
Mm-hmm.
What's number two?
Your financial statements. So we're talking about balance sheets, your income statements, your profit and loss statements, right? Because we're looking at, these financial statements basically show the company's financial health. We're looking at your DTI. We're looking at your profitability as well as your credit history.
I'm trying to keep up. I'm trying to keep up. Okay, Keith, go ahead.
Essentially, what he's saying is just have your financial documents in a row. Have the documents in an organized fashion so that when you are meeting with your bankers, it's as seamless as possible. It's not waiting for you to look for the documents. Everything is aligned. Your taxes, your profit and loss statements, your account receivable statements, your balance sheet, and knowing where your FICO score stands, knowing where your personal credit stands is really beneficial before you go and submit these applications, because Some of these banking institutions are really conventional they're really conservative. And one thing that we don't want to do is run into a wall by having our personal credit not be up to par. So just making sure that we are keeping those aligned and ready. So when you are trying to get access to capital, you're not running into any problems.
And it looks like we
Absolutely.
have some U.S. bank customers watching, streaming today. Let's give a
Well,
shout
thank
out
you.
We
to
see
Well,
you,
Retail
thank
Ricky.
you for your
Currency.
business. Thank you
Let's
for your
praise
business.
We see you, Ricky. We see you.
So, and then another thing I wanted to also add in. So, businesses are in various stages, but when you're in the beginning stage, I need you to think about who are you, right? I need you to think about who. This is another acronym. The W, who are you? The H stands for how is what you're going to do is going to impact the community. But then O, the outcome. What's the expected outcome you want to have for your business? And then also, we need to delve into your why. We start businesses for different reasons. We start our entrepreneur journey for different reasons. But I think having your why and the who, I think it'll help propel you when times get tough and allow you to plow through the tough times because that'll keep you on track. And then another key component it's about having relationships. And Keith can speak to this. But the first time you need capital is not, it should not be the first time we know you, the first time we hear from you. You need to have a relationship with your banker. And the reason why this relationship is so important, because this person becomes a specialist in what you do and who you are, both personally and professionally. And so when the story is trying to be told, when you have that relationship, it's easy to have someone there stand in the gap on behalf of you because the relationship is forged. And then if there's any blind spots, we're there to actually fill those gaps on behalf of you.
And to piggyback on what Will is saying, building those relationships are really beneficial for yourself, not only as a business owner, but as in your personal growth. The banker, this relationship with that banker is they can advocate for you when you're not there. They can speak and reach individuals who you can't speak to. They can get things overturned, right? Especially if it makes sense. Because at the end of the day, applications are sent in our systems and they have some type of system that's already aligned. And if you don't meet and check those boxes, you're automatically going to be denied. But that's before an individual had their chance to look at it. So that banker is able to be that advocate for you and get a relook and potentially get you those funds that were denied by the computer system opposed to an individual.
So I'm gonna just take the liberty to veer off for 1 second. I know we're talking about entrepreneurs, but we're also talking about small business, and I have a lot of churches that I work with. So don't frown, don't frown. Come on, keep the smile up. So for your bank, because I know a lot of churches that some of them they bank with you. Do you consider them small businesses? And what would your advice be to them when they are looking to do business with US Bank and to get loans from US Bank?
Uh,
So
oh, go
go
ahead, Will.
ahead, Keith.
No, great. Honestly, we do consider them a small business. They're still a nonprofit. At the end of the day, when it comes to helping them expand, the things that go on with nonprofits is that there are no owners of the nonprofit. They're just members. So that means if you are getting lending, that you will have to be a personal guarantee. And what you will want to do to make sure that you are able to be lendable is have your personal FICO score, your personal finances in line with what you're trying to acquire.
No, absolutely. It's about one of the things I will say to add to that. We're a community bank, and we're about impact. It's about how can we change the trajectory of the communities we serve, and churches is a cornerstone and a keystone to who we are, not just as a people but as a community. So there are options for us, but as Keith touched on, there has to be a little bit more. Your package has to be perfect almost, because there's no beneficial owner. They're only members.
Okay, I'm gonna let y'all get to y'all presentation whenever you're ready. But I
Break it
had to
down.
put that in there because I know
No,
it's.
we like the dialogue. We like the back and
Mhm.
forth because I mean, this is one of the things about Keith and myself. We don't want to just sit and have comment. We don't want to just talk. We want to have dialogue, going back and forth, and understanding what the pain points are, what hurdles the business community is facing. So that way, we can at that point put together a tailored solution to help them again be sustainable and successful and get to their end game. So this is great, Selena. Thank you for this.
Thank you, Selena.
You're welcome. I'm not going to hijack you anymore.
No,
Entrepreneurship 101,
let's
money
get it
back.
done.
Let's get to it.
Let's get to
All
it.
right. Keith, the floor is yours, young man.
Perfect. Once again, my name is Keith Leonard, everybody. Thank you for taking the time out of your day for coming here. I know how it is. You're all entrepreneurs and you have a busy schedule, so we appreciate your time and effort. Can you go to the next slide, please? So it's me, and Will. Like I said, I am the small business specialist. That is my official title. Will is a business access advisor. If you are looking to explain both roles, Will Jackson is mostly involved in the community. I'm mostly involved with the small businesses and getting your operating accounts, getting your lending, and getting your merchant, your treasury management, everything you need to run your business. That's who I am. I'm the individual that will help you get that established. Will Jackson is the one to find you additional funding if you aren't able to get traditional funding through U.S. Bank. Will Jackson is the individual who can get you that package, right, and find you that funding that you may not have got approved for through a conventional lending. Next slide, please. So the agenda today is going to be understanding credit types, business credit reporting, credit worthiness, and business credit options. So those are the four categories I'm going to be presenting you guys with and giving some information. And hopefully you can take some back and create some reassurance for yourself on how to acquire access to capital for your business. Next slide, please. And you can move on twice. Okay, perfect. So why is credit reporting important to your business? So anytime that you're applying for a business credit, your personal credit history will be reviewed. Most of the time, there will be a hard inquiry placed on that. And it helps us decide your ability to pay back by seeing what you already have with your personal credit compared to what you're applying for your business credit. So it gives us a quick insight of how you're going to manage your business funds based on your personal FICO score. So example of that would be if you have a $10,000 credit card on your personal credit and you want to apply for a business credit card and you're looking for a $25,000 limit, but you never had that limit on your personal side, it will be unlikely. It's not a higher chance that you will be approved for such a high limit. I'm not saying it won't happen. But I will say it's a hard chance that you will be approved for a $25,000 credit card if you personally never had that. So whenever you're looking to apply for your business credit, make sure that your personal credit aligns with the products that you're going to be applying for your business. Next slide, please.
And I just want to chime in real quick on that. And the reason why this is important, especially when you're a new business, you're having your personal credit in order. Because what we're looking at is a behavior, as Keith touched on. And when there's no behavior, you're a brand new business. We don't have anything to go off of because you're a brand new business. So we're going to look at your credit and we're going to look at behaviors. We're going to look at payment history. We're going to look at exact what Keith talked about, the highest credit limit you actually have to understand if you have the capacity to handle this, right? So we're going to look at that. So that's why your personal credit is important. And LLC does not absolve that, contrary to what you may hear on the internet. That, oh, I got an LLC, I don't need my personal credit in order. Well, that's false because, again, you're a brand new business. We're going to look at that from a PG, personal guarantor perspective.
Thank you, Will, for that. So this slide is essentially talking about it's like an XY axis of a spectrum of showing you the importance of personal credit compared to the importance of business credit. So when in the beginning of your business, usually within the first 2 years, acquiring lending is somewhat of a hard challenge. We all know that. We all been there, especially as entrepreneurs. We know how hard it is to get access to capital when you're first getting started. So the banking institution will rely heavily on your personal credit score to see your ability to pay back. So in the beginning, just expect for within your first 2 years and depending on your revenue, your gross revenue, your personal credit will be for sure checked every single time you apply for a business product to see if you have the ability to pay back. And as your business grows, the less your personal credit will be looked at. And once again, that's determining on your gross revenue and how large your business is at that point in time. Next slide, please. So what is a personal credit score? If you don't know, a personal credit score is created by 3 different credit bureaus, and it's titled a FICO score or a Vantage score. And how it happens is the smaller your number is the poorer credit. The higher your number is excellent credit. And what I like to say is, the lower your number is the trustworthiness. The higher your number is how trustworthy you are. So the lower the number, we don't trust you. The higher the number, we trust you. And how I like to break this down to make it even more simple: if an individual came to you and gave you $1,000 and they said, you told them, I'm going to pay you back in 30 days, and you pay them back in 30 days, you have an amazing credit score with them. But say if that person came back and only paid you $20, you're going to look at them and never give them money again. And that's the same thing of how credit bureaus use the determinability of ability to pay back. How are they using their credit? What is the utilization? What is their payment ability? So those things take in consideration of your FICO score and create the FICO number and Vantage score that we look at to determine your ability to pay back, and if we want to move forward with doing business with you. Anything you want to say, Will, before we move on to the next subject?
No, you covered it, young man.
Perfect. Let's go ahead and move forward to business credit report.
You know what? Let me chime in, Keith. You know I always got something to say.
I know, that's why I said I gotta let you talk, man.
So one of the things we tend to think that having challenged credit is a death sentence. It's not, right? It's going to take some work, take some discipline to get it back in order. But one of the things I suggest is when you look at having challenged credit, it's kind of like when they have a natural disaster. First, you have to come in, you have to assess the damage. Once you assess the damage, then we put a strategy in place. Once the damage is assessed, we put a strategy in place, then you disperse funds. So when you look at your credit report, don't look at it as, oh my God, it's just over. It's not, but it's going to take you doing something. It's going to require action, accountability, and assertiveness to get this thing done. Pick up the phone and have conversations. The worst thing you can do when there's things out there, I mean, listen, I know what it feels like to have challenge credit, right? I'm not going to sit there and act like, it's been perfect all the time.
Right.
But ignoring your credit doesn't help. It doesn't help you. It won't help you. It's not going to go away. It actually gets progressively worse. So it's about really having a conversation, understanding what it is, what needs to be fixed. We already know what the triggers that got us here. So we don't have to sit there too much, but really addressing, hey, you know what? Let me get this fixed, because one thing we also like to see is a comeback story. Someone who has some skin in the game, so to speak. So just don't ignore it.
Yes, and thank you, Will, for that. And here's another tidbit for you. When you go to your doctor, you tell them everything is wrong with you, being completely transparent because you want to be healed. The same thing applies to your credit. When you meet with your banker, be completely transparent. They're not there to judge you. They're only there to help. And they have the information and the resources and tools to help you reach that goal of what you're trying to acquire. So when you sit with your banker, make sure you being completely transparent. Hey, I have this on my credit report. Allow them to look at their credit report so they can give you a plan of action and help you reach that goal that you're trying to acquire. Next slide, please. So the next topic we're going to be speaking about is business credit reporting. And this is just understanding the impact of how business credit reports to your FICO score. Next slide, please. So personal versus business credit report. So business credit reporting obviously has your personal identifying information, your credit history, inquiries, and any public record information. Compared to your business credit report, it has your business identifying information, your business credit history, business background, the registration and the financial information, and public record information. So they're fairly the same. It's just the biggest difference is the background, business background, the registration, and financial information. It's a little bit more in depth for business credit reporting. Next slide, please. So the information that is contained on your business credit report, once again, is the business identifying information. The examples is the business name, business address, the phone numbers, your DUNS number, your industry classification code. That is a code that we use to identify what industry you're in. It's called the NAICS code, NAICS code. Business credit history. So the companies that have granted you credit. So if U.S. Bank has given you lines of credit, that would be on your business credit report. Amex, if you got a credit card with them, that'll be on your business credit report. Payment data says to suppliers and vendors that you leverage, that you purchase from, and risk scores and ratings from each of those vendors and industries. For your business background, you're going to have registration and incorporation data, your legal structure of ownership. So if you're an LLC, corporation, S corp, sole proprietor, and who owns it. History of business affiliation, so businesses that you have worked with in the past. Corporate financial reports, so if you have any financial reports with any other businesses, that's there as well. Contract grants, loans, and debargment from federal governments, and self-reported data. With the public record information, you're going to have your UCC filings, which are any liens placed against your business, lawsuit liens and judgments, business registrations, incorporating current and past bankruptcy filings from state and county. If you want to look at your public information, you can, if depending on where your article is filed, you can go to that sos.gov website through your state and check and see if you have any liens. Some people don't know if their business has any liens. If you went to the CPA, you most likely have a lien on your business if it's not paid off. So make sure you go and check to see if your business has any liens before you can look for any type of access to capital.
And then also, I just want to say, it's also important to understand what your business designation is going to be, whether you're going to be LLC, S corp, corporation, C corp. These are all the things that you need to sit down with a CPA and understand what you want the structure of your business is going to be. That's extremely important because LLC may not give you everything that you need. S corp may not give you everything. So I think it's important. This is where the relationship comes into play because they can advise you in the way in which you need to go, especially when you identify what your end game looks like. Our jobs are to get you there.
Yes. And additional to what Will is speaking, it is important to know what each of these individuals do for you, right? If you're an entrepreneur, you're the one who spearheads your business. If you have a banking relationship, they're the ones who help you manage and manage your funds for your business. Your CPA is going to help you with taxes for your business. Your lawyer is going to help you with the legalities of your business. So just knowing what each individual is doing for you so that you're not commingling relationships and saying, hey, I want you to go to your banker and be like, tell me what should I do for my taxes. That individual is going to be able to guide you correctly compared to that CPA. So just be mindful of your relationships and what they're there to do for you. Next slide, please. So the major players in business reporting is Duns & Bradstreet. If you don't have a Duns & Bradstreet number, I highly recommend you go and apply for one immediately. There are certain lending requirements that require a stipulation that require you to have a Duns & Bradstreet number. So if you don't have one, I recommend you going to follow that immediately. Equifax is something that is automatically populated, and Experian Business is something that's automatically populated with your EIN and your business name. If you want to go check those, I advise you to go on those actual websites and type in with your EIN information, all your business information, so you can create that, so you can constantly check where your score is at. Next slide, please. So the other credit reporting agencies that's out there that are not so known are Paynex and LexisNexis. So basically, it's a proprietary. Paynex is a proprietary database for small business leases, loans, and lines of credit that is sells to the banks and non-banks and will give you a free copy on request. So if you want to check Paynex, you can get a free copy upon request. With LexisNexis, it offers a business credit report using credit data from Small Business Financial Exchange, the SBFE. It's a non-traditional data. So this data is collected from third-party individuals, and then they create this score for you. And you can go and check that report as well. Next slide, please. So once again, like I stated to you before, it's important to check your business credit report once a year. It's yours. It's available to you. Apply and pay for your business credit report from one of the main credit agencies. And use alternative credit services to access free business credit report as well, if you can. Because if you can avoid fees, do it. Right? You don't need to pay.
Right.
You don't need to pay for everything if you don't have to. That's not the point of being in business. Being in business is for profit. So don't just create an expense for yourself if you don't need to. Next slide, please. So establishing business credit. Why should you do it? Why should you establish business credit? Here's why. You want to expand. Most of us in here wants to create generational wealth. You don't want to have your business open for 2 years, 5 years, and call it a day, right? You want to have something that's going to be eventually timeless, or you can sell it. And by establishing business credit, you're actually giving yourself availability to expand faster than an individual who doesn't have business credit. And the lenders, right? They help determine the approval and financial time to suppliers. They decide whether to grant you deferred payments for goods, right? So if you have a stronger FICO score for your business, just imagine if you're running your business and you're like, hey, I need some money. I don't have the cash right now, the liquid funds. But since I have such a strong FICO score, the vendor is willing to give me a line of credit.
Right.
That's from the vendor that will give me that availability to push out that extended amount of debt and keep me going, right? Customers, if I came to do business with you and I heard that you have a terrible credit score, because I can check your information, it's public, I don't want to do business with you. What you gonna do with my money, right? It's you're not gonna do anything with it. You're not gonna put it back in your business. So I'm gonna leave you alone. So insurance companies, when you're going to get insurance for your businesses, they will help determine that price. So creating a higher FICO score just helps you save money in the long run. Like I said, you're a for-profit business. Don't create a higher expense for yourself if there's a way to save you some money, right? Let's when you first start your business, let's apply for this business credit card. If you have a problem, then let's get the personal credit right so that you can segue into getting your business credit so that you're saving yourself money in the long run during your business endeavors.
And
Go ahead.
no, I was just gonna say, a good credit history. The theme about all this is, it displays a pattern of more timely payments, right? Which results in more favorable terms. And that's what you want anyway. You want the favorable terms. You want the best possible rate and term possible. And that all comes from the foundation of your credit, right? That's the history of you being able to pay back. Essentially, you being a person of your word. That's what it boils down to. You are a person of your word.
Next slide, please. So essentially what this is saying is support businesses grow and sustain. And what that means is you start with access financing. You get your credit card, you get your cash flow manager, then you acquire your inventory. You purchase necessary equipment and materials, and then you manage your working capital, and it goes in a cycle over and over again. But you won't be able to do this if you don't establish business credit. Because at the time when you're going to expand and somebody comes to you and say, hey, Walmart comes to you and say, hey, we love your product, we want it, but we want 250,000 units. It's going to cost you probably 300,000 to go to your manufacturer and get that made. Who has $300,000 liquid? But if you had a strong FICO score, there's a possibility you could get approved for a line of credit, get that payment, get paid from Walmart, and now you have the ability to pay back and keep that up and keep it going. So that's why it's so important to start building your business credit immediately. Next slide, please. And here's how you do it. What you should have is your EIN number, right? Get a copy of your EIN if you don't have one already. Keep it in a safe place. Save it as a PDF in one of your computers and a document in a USB. Your business credit report. Verify whether you have one once you have your EIN number. And business lender reporting your credit information. So make sure that the lenders and liens that you get on your business, the business that gives you that lien and loan or credit, make sure it's reporting to your business credit. Okay, you don't want to just have a net 30 out there that's just not reporting to your business credit, and you've been using them for a year and it's not been benefiting you. Next slide, please. So we're going to be moving on to speak about credit worthiness, how lenders evaluate your credit worthiness. So let's move on to the next slide. So we're going to be putting it all together. So essentially, there's 5 C's of credit: capacity, collateral, credit history, conditions, and character. Traditional loans, traditional lenders like U.S. Bank runs off of the 5 C's of credit. As you can see, each one has a size of capacity, collateral, but you see credit history, how large that box is.
Right.
That's because we use that to really determine your ability to pay back. We can look at the capacity, right? We can look at the collateral capacity, how much lines you have access to. Collateral, what do you have in place if you don't pay back, right? Your credit history, looking at what you've been doing this whole time. The conditions, what is the conditions of the economy, and the character of you as an individual. Do you pay back? Are you late? Do you make double payments? What type of person are you? These are what we use to determine your ability to pay back at a traditional lending. Next slide, please. Non-traditional credit data. And basically what this is typically non-loan data that may still help determine your risk. So personal credit reporting examples, the utility bills. If you're late on your utility bills, they can find out about that. Your phone bill, they can find out about that. Your rental data, right? They can find out about that information. They can say, well, let's look at your personal credit. Oh, it looks like it's
Hmm.
decent. But let's check other agencies. They're asking for $150,000. We want to make sure you have the ability to pay back, and we want to know that we're doing business with the right character. Business credit reporting examples is online business reviews, shipment volumes, e-commerce trades, and merchant account transactions. That's something we can use as well. So if you have merchant services somewhere and you got a lot of account receivables coming in, but you don't have a strong FICO score, we can use your accounts receivables up to 90 days to determine if you have the ability to pay back because you're cash flowing a lot of money. Next slide, please. So there's different lenders and different priorities, and this is something that we'll specialize in is that CDFIs. So lender A is essentially providing startup loans. They consider all 5 C's of credit. That's U.S. Bank. Emphasizes on personal credit and collateral. Lender B provides working capital. Considers all 5 C's of credit to some degree. Emphasizes business credit and non-traditional credit and conditions. So meaning if you don't have a strong personal FICO score, your business FICO score isn't as strong, but it's cash flowing a lot, you're making a lot of money, your vendors are saying that you're paying them on time, your merchant is stating that you're receiving a lot of accounts receivables, you're making 30,000-40,000 in accounts receivables every month. That lender B can take that into consideration and actually give you a loan or a line for that amount. So just because you get a no at a traditional bank, don't let that discourage you and say, okay, my hands is up, it's out of my control. No, go and reach out to these partners like Will and say, hey, I have this problem. Be really transparent so he can assess to your direct need and find you that funding that you need for your business.
And what Keith is mentioning are CDFIs, which are community development financial institutions. So essentially, what they are banks that don't take deposits. Their credit, their underwriting guidelines are a little bit more relaxed than a traditional lender, and they don't look at the same things we look at. But as he mentioned, just because we're not the best option at the time, it doesn't mean it can't get done. But this is where the relationship comes into play, because when you have that relationship, then our job is to let you know exactly what your options are. And again, to get you to your end game, regardless of if it's with us. We would love for it to be with us, but in the event it's not, that's okay. Our job is to stand in the gap for you and direct traffic.
Exactly. Next slide, please. Thank you for that, Will. What he's saying essentially is we're here to provide you information and resources. Just because we're a conservative bank, and say if you don't get approved with us, that don't let that stop you from building a relationship with us. At the end of the day, we're here for you. We're not a company that focuses on sales. We're a company that focuses on relationships. So allow you to build that relationship so that you're always here with us on the top of our minds. So what is a good credit score? Factors that input your business credit score, very much like personal, right? Time in business, payment history, credit mix, credit utilization ratio, and mistakes on your credit report. So mistakes on your credit report can look like wrong address being reported, right? Business name being reported wrong. Those things can take away from having a clean FICO score for your business. Credit utilization. If you don't know, just a great rule of thumb is 30%. Anytime you have a line, every $1,000, just remind you, don't leave a balance over $300 if you're going to be looking for lending in the future. Okay. Just always remember that every $1,000, $300, you don't want to leave it on there if you're going to be looking for lending in the future. If that is the case, then think about the chances of debt consolidating. It'll save you a lot of money and keep your FICO score higher. Next slide, please. And we're going to be moving on to the next section. That's going to be speaking about business credit options, and that's exploring your choices that you have. So there's three choices: traditional lending, subsidized resources, alternative funding. With traditional lending, that's your U.S. banks, your Wells Fargo, your Chases, your Bank of Americas, right? Your traditional lending companies, your CDFIs, the things that Will does, right? These are the traditional lending. Then you have subsidized resources, which is your SBA, your local government small business loans. So your chambers, grants that you can get from your government officials. Alternative funding is your friends and family, right? Mom, go to girlfriend. Hey, I need some money to get this business going. Fintechs, crowdfunding, ventures, venture capitals, angel investors, and incubators, accelerators. Will, do you want to speak about those alternative fundings a little bit?
So, as I mentioned earlier, we talk about, CDFI. So, again, we're the fourth largest bank in the nation. So, if there's a product or service you need, we definitely have it. But there are times when, whether it be a credit challenge or just anything, then we go outside and we leverage our relationships with these lenders. They're not predatory lenders. They're backed by the government. They're backed by banks. So the rate may be a tad bit higher, but again, the ultimate is to get you the capital you need to scale and grow your business. And so sometimes, again, we can't do it, but it's about really providing you those options. And these CDFIs are here, like Lendistry, Main Street Launch, Working Solutions, TMC Capital. These are all CDFIs who are in the business of lending, but they also not just lending, technical assistance. They get up under the hood. There may be bookkeeping you may need. So it's not just the lending aspect, it's value for you and your business, not just the writing a check. Because we talk about generational wealth a lot. We hear that it's a buzz term, it's been floating around a lot, and passing down generational wealth. But we also forget a key component of this is passing down that generational knowledge. And so if I can give you a fish, as the saying goes, right, I can feed you for a day. But if I can teach you how to fish, you'll be fed for the rest of your life. So it's about understanding the banking. A buddy of mine, Jasper Smith, always says helping folks change the way they think and feel about money. So that's what this is. It's about the education aspect of it. Yeah, there's products, yes, there's services, but it's really about making sure that you're an expert in your finances, you're an expert in your business, and then also aligning yourself with the various folks around you, your super team, your bail, so that way we're in concert on behalf of you to ensure that your business is successful and sustainable.
Mm-hmm.
I'm gonna just jump in because Will told me to. He's my boss. I want
See,
to.
this is exactly why we can't rise up as a people.
We just
This is
can't.
exactly why.
We don't do right. I want to open it up for questions. We can take questions in the chat. So if you have a question, please type it in the chat, and we will do they'll answer it. I'm not going to answer anything. They'll answer your questions though. But I've gotten some questions over the last few days. Someone asked me, do I think a bank would be interested in lending to minority contractors for equipment? So I wasn't sure why I was asked that question, but I'm sure you know the nuances. I don't know if there's a different process for lending for equipment, or if it's just a little more difficult to get lending for equipment, or what.
No, honestly, equipment financing isn't difficult to obtain. It's just the fact that you have to have your articles established for at least 2 years. You have to have your Dun& Bradstreet number registered, and then your FICO score wants to be over 750, a grade A. So it's not the point of it being difficult. It's just U.S. Bank is highly conservative, and that's what kept them out of a lot of trouble with unlike any other financial institutions. So one thing that I want to focus on is that personal credit aspect. just zone into building your personal credit to the point where there's no what I say boo-boos, right? No late payments, no multiple hard inquiries, no bankruptcies, having these in a row. But yes, we do lend to minorities. We do have focused business diversity lending that is specified for minority owned businesses. So if they are looking to acquire some equipment, just tell them to reach out to us, and literally one of our bankers will figure out, create that game plan for them and that best course of action to get that acquired, especially if they meet those stipulations of having a strong FICO score.
Awesome. Another question that I get a lot. Well, Jack and I, we like to discuss. We like to go back and forth. But we talk a lot about entrepreneurship as a pathway to success or alternative to a career as entrepreneurship. What do you think about that? In the terms are about like growing or increasing generational wealth within the community. Here's a question: do you see entrepreneurship as a pathway to increase generational wealth in the community? How to think about
Absolutely. Entrepreneurship comes with, first off, entrepreneurship is the backbone of our country, right? And so when you think about the freedom that comes with it, it's a lot of hard work, and you got to have the stomach for entrepreneurship, right? It's not something that everybody can do, but you have, again, it goes back to your who, your why, what triggers, and then what the expected outcome it is. How is what you do going to impact the community? I think it's important to really dwell those out, because if you don't have that, because it can be difficult.
Mm-hmm.
It's easy to say, as Marvin Gaye said, make me want to holler and throw up both my hands, right? Because it can be a difficult task. But I'll be honest, the financial freedom that comes with that, there needs to be a discipline in place. But it is definitely a pathway for generational wealth, passing down that generational knowledge, as well as in solidifying your family in that space.
And to add on to that, Will, I think in our community, we want to think of entrepreneurship as in getting into something that we personally love doing and enjoying. Getting into trades, getting into something that we can wake up and do for free, essentially, because that's what's going to drive you every single day to get up, go after your goals, is knowing, because there's going to be days where you're not making enough money to pay payroll. There might be days where you're not going to be able to purchase your inventory to move forward for the next month. But what's going to keep you driven is knowing that you love it and knowing that you see you can foresee the future and what it can become and how it can benefit your family and create that generational wealth. So stay with the things that you're passionate about, stick with the things that you love, and stick with trades. If you have a trade, you have a skill, stick with that skill set or something that's never going to go away.
Absolutely. And then also, just when you think about it, it's a difficult task, but at the same time, when the impediment to action really advances action. What stands in our way really becomes our way. Where there is no obstacle, there is no way. So ease is the greatest threat to progress than hardship. So even though it may be hard, it may be difficult, but nothing worth having comes easy.
Right.
And to Keith's point, this is your passion. This is what drives you. So you have to sit in that pocket and propel you when times get tough. When you're looking around and not understanding, man, did I make the right decision? You did. You absolutely did. And you can't quit. You're going to plow through your pain and focus on your legacy and what that end game is and how this is going to impact not just you, but generations to come.
Mm-hmm. Hopefully that answered your question, Selena.
You gave me a lot. I have a question about the I want to call it payroll advances, but I'm not sure if that's the right term for it, and why the interest rate is so high.
So when you think about payday lenders, they monetize us, That's why if you think about where they're strategically located, um, they're short term, but it's hard to get off that hamster wheel,
Well,
right? It's hard.
the one for business. So if you get a contract and then they advance you money, some people don't know that that exists. I just learned that recently, that if you get a contract, there are some lenders that you can reach out to, and they will advance you a certain percentage of whatever that contract is. And so, I mean, and it's a great option if you're just in a bind and you need to get, you need some revenue. But I just want to talk about, I know that the bank doesn't do that, but I'm sure you have partners that do that, that, in emergencies, you're able to refer people to. And so how does someone leverage a product like that?
So I would say, and then I'll allow Keith to chime in. To your point, Selena, it it's a quick. It allows you. It fills that gap. It allows you to fill that gap when you need that capital. Like now, you're trying to fill a PO, a purchase order, and you need it. But it's not a sustainable business model. The rates are extremely high because they're taking a lot of risk. And so it's good short term. It's not something you can base your business off of. Well, hey, I'm gonna go over and grab this, grab that, because as I made in the other example, you'll never get off the hamster wheel. Never.
Yeah, and to piggyback on what Will is saying as well is make sure you're completing your business analysis, because usually what happens is a business owner will come in with an idea of how much they want, but it may not be enough, or it may be too much. And then when they're capturing that loan or line, their monthly obligations get shot up, and then they're not able to afford it. So just making sure that you're doing you're conducting your business analysis and doing the right research and calculations of how much you're going to be needing, and not biting off more than you chew. And like Will was saying, this is just a temporary solution, right? For a major problem, and that problem is cash flow. So go back and start reevaluating your business model and seeing where you're losing money at, or seeing where you can cut off from expenses, because that's saying that there's a cash flow issue with the business of why you're not able to afford payroll, and probably not having access to capital, not having access with your FICO score not being as high as it possibly can be. So just going back to the foundations of your business and figuring out where you can improve at, or where you can deduct from on your expenses.
What is a special credit purpose program? A special purpose credit program?
So we have something at US Bank called VDLP, which is the Business Diversity Lending Program. And to qualify, it's designed to help small business, BIPOC people of color. You need to be at least 51% ownership in the business. And so it's a crucial role in promoting economic empowerment among minority-owned business. It's about providing a hand up and not a handout. It relaxes our credit requirement guidelines. I'm not sure what the points are. It relaxes our cash flow requirements. And again, it allows for more favorable rates and terms. And so it's about providing a hand up. And that's a product that we have. When you're having a conversation with Keith, you would say, hey, he would, tell you all the nuances of the program. And then you can say, hey, I want to opt in, and then you'll opt in and again. Now, it's not a fix to everything, right? So don't think, oh, well, I'm Black, Hispanic, I'm automatically in. No, there's still prerequisites that need to be in place before we even get to that piece. But what this is designed to do for us to just be intentional and deliberate about closing that wealth gap. And that's what we're doing over at US Bank.
That's what y'all doing over at US Bank, huh?
That's what we're doing at US.
That's what we're doing at US Bank. Listen, we are here transforming this landscape. And just to be honest, and this is not coming from a perspective of like or better than any other financial institution, but I wouldn't be in my role if we weren't intentional and deliberate about it.
Right.
We wouldn't be here if we weren't intentional and deliberate about it. In my role, you don't even need to open up an account with US Bank. We're here to establish trust, right? We're not here to push products or services. That's not what we're here to do. We're the fourth largest bank in the nation, as I mentioned. And if there's a product or service you need, we have it. But it's really about understanding who you are, what that end game looks like, how we get you there, and really, really creating a relationship and creating an environment where you can be vulnerable enough to get to know us get to know you, establish that trust. And then at that point, we can really get down to the nitty gritty and helping scale and grow your business.
Right.
That's awesome. So I'm going to give you two minutes collectively to close this thing out, to close our Finance Fridays out. I don't know who wants to go first. You guys want to?
I'll say this. Finances, especially, in the Black and brown communities, and just not just our communities, but folks' communities as a whole. We stay away from it, right? Because it's taboo. You don't want to deal with it. You hope it goes away. But this is about having conversations, keeping your financial house in order. Come sit down with a banker, whether it's U.S. Bank or any bank. Get you a banker and then interview the banker. Have a conversation and understand if they understand what you're trying to do. And then allow them to get you to your end game. We're here all day, every day. We're outside. As young Keith would say, we're outside. And so we're outside. We're in the community, we're moving around, and we're really here to stand in the gap on behalf of the community and help transform the trajectory of our community.
And to finish off what Will is saying, leverage us as a tool and resource, right? Even if you bank somewhere else, just come and pick our brains. We have this information. We talk about it day in, day out. This is our specialty, is to understand finances. We don't expect you to know every single thing. And if you do, then use this as a reassurance tool, right? Hey, you're not so certain about something, come and ask us the question just to get the feedback, just to give yourself reassurance of knowing that you're up to par on the information for literacy. So, like I said, it's a pleasure to give you guys all this information. It's a pleasure to support my community as much as I possibly can. Once again, my name is Keith Leonard. Please leverage me as a tool and resource. I will be available. I have my own cell phone number, so if you need to text me, call me, tap in, right? I'm not going to tell you to reach the robot or talk to customer service. You got me as your friend, as your advocate when you come here at U.S. Bank. So just leverage me as a tool and resource, please.
And I will end it with this. My name is Will Jackson, and I approve this message.
Weekend shenanigans already started. Well, I want to thank both of you gentlemen for sharing this very important and vital information with the community. A lot of time, we have not because we ask not, and we don't know stuff because we just don't know. We've never been exposed. We lack the knowledge, and so what we're trying to do at BSBA is educate everybody and just let the community know, let the small business community know that you don't have to struggle. There are ways to just do things, do it the right way, and learn how to leverage what you have and grow it and make it more and be great. So with that, thank you for joining us today for Finance Fridays. We will see you next Friday, same time, 3 p.m. Have a great day.
Have a good one. Thank you, everyone.